Understand your credit in under 15 minutes. You guys, today I want to share some tips with you to help you get a better understanding of your credit. And hopefully you can take the things that I share with you and start using them and implementing them to start increasing your credit scores once this video is done. You guys, my name is Jennifer Campbell. I am the CEO and founder of the Credit Laboratory. And today I will be sharing with you all of the things that I have learned over the past few years after helping hundreds of people. Let's do our introduction and welcome. You guys, who is the Credit Laboratory? The Credit Laboratory, we started helping people with their credit back in 2018. In 2019, we got incorporated with the state, and we have been going strong ever since. The Credit Laboratory, we help people with their personal credit and their business credit. At the Credit Laboratory, our mission is to help you reach your credit goals. Now, let's talk about, is credit repair? Or first, let's talk about what is credit repair. Credit repair is when you or another company work on your credit, try to increase your credit scores. Whether you are getting inaccurate, outdated, unverifiable information removed from your credit reports, or whether you are trying to build credit. Trying to increase your scores is going to be considered credit repair, trying to increase your scores or build your credit profile. Now, let's talk about, is credit repair legal? Yes, a credit repair is legal. Now, just like any other industry, there are certain guidelines that credit repair companies do have to follow in order to stay in compliance, but credit repair is legal. Although credit repair is legal, there are some states that do not allow credit repair. For an example, when it comes to Georgia, in order to provide credit repair services in Georgia, you have to be an attorney, a nonprofit organization, or a real estate agent. If you aren't one of those three, you should not be offering credit repair services in Georgia unless it is do-it-yourself services. Now, TSR, the telemarketing sales rule. Let's talk about that. I don't know if you keep up with things in the news, but not too long ago, one of the biggest credit repair companies in the industry was actually sued. They were sued because they were signing up clients over the phone and providing free consultations. With the TSR, the telemarketing sales rules, for credit repair companies, it states that if we speak with someone over the phone, or if you sign up a client over the phone, you cannot charge that person until after results have been provided. Not only can you not charge until after results have been provided, you cannot charge until 6 months after those results are final. That's why that company got into all of that trouble. So now, in order to sign up for credit repair, the industry is changing. Most companies are trying to get in compliance, and they will not sign you up over the phone or through a consultation over the phone. Now that we got the introduction and welcome out of the way, you guys, if y'all want to time me, you can start your 15-minute clock here. Let's get into credit history. How did credit even start? You guys, before there was personal credit, there was a business credit. With business credit, there was not a system in place like we have now. There were not any laws in place to make sure that business owners were protected or consumers. With business credit, when it first started, what they would do is, in order to approve you for an account, they would talk to your friends, your family, your neighbors to see what type of person you were. They may speak with a company that you've used before to see how you made your payments. Now, with any industry that is not governed, you can pretty much imagine that without the FCRA, a lot of people or a lot of businesses and consumers, because the FCRA was not created until personal credit came along. But before then, people would get denied because of their religion. people would get denied based on their color, their sexual orientation, disability, age, anything like that. So now the FCRA, it actually protects us from different things like that. So Equifax came first. Equifax was around when it was just business credit. Then came along Experian and TransUnion. Now, what is a consumer reporting agency? If you notice, I just said Equifax, Experian, and TransUnion, and I've been calling them credit bureaus. That is actually not their name. The Equifax, Experian, TransUnion, they actually gave themselves the name credit bureau. And I wonder if you can imagine why. It is because of the bureau at the end of their name. If you think about it, when we think about the FBI or something like that, it's always bureau at the end. So we know that they're federal. So my belief is they did that as a way to make us think that they were some type of federal entity, and they are not. Equifax, Experian, and TransUnion, you guys, they just started collecting our information and sharing it with other people. That's how the FCRA was created, to regulate that. So they are consumer reporting agencies. That is their name. They are not credit bureaus. And a consumer reporting agency is any third-party entity who collects your personal credit information and shares it with others for a monetary gain. That is what the credit bureaus do. They are consumer reporting agencies. Now, I will call them credit bureaus for the simple fact that's what you guys are used to, and I want to make sure that you can follow me. But if I do call them consumer reporting agencies, understand that I am talking about Equifax, Experian, and TransUnion. Now, we already discussed what a credit bureau is. Credit bureau does not exist. They created the term bureau. They are consumer reporting agencies. They have an LLC in place, just like the credit laboratory. They are not a federal entity, but they are governed by the ABC boys. Okay? Now, let's keep it going, you guys. Now, let's talk about why your credit scores are different. I get questioned a lot, especially when it comes to Credit Karma. I'll see someone log in to Credit Karma, see their scores, and then they'll go apply for something and they will get denied. And they want to know why. Well, you guys, here is why. When you're looking at Credit Karma, you're looking at your Vantage credit scores. And the next time you log into Credit Karma, I want you to look under your scores at the tiny writing up underneath it. It's going to say Vantage 3.0. Okay? Make sure you understand that Credit Karma uses our Vantage scores. When we go and we apply for a car loan or a loan through the bank or a mortgage, those lenders are going to be looking at our FICO scores. Anytime we apply for something major, including credit cards, even small loans, they are using our FICO scores. Our FICO scores and our Vantage scores are calculated differently. That's why the score is different. And I will be going over that with you guys here shortly. Now, Vantage scores were created by Equifax, Experian, and TransUnion, you guys. They created those scores as a way to compete with the FICO scoring model, because the FICO scoring model was around way before the Vantage model. Most lenders will be using our FICO scores, you guys. Credit Karma is good for educational purposes. Even the Credit Sesame, they're good for educational purposes. But if you want your real scores, you're going to have to look for your FICO scores. You can see here, this is a list of all of your FICO scores. We have our most widely used versions. We have auto lending versions. If you can see, there's 9 of those. We have versions just for credit cards. We have versions just for mortgages. When you're applying for a mortgage, your lender is going to be looking for your FICO 2, 4, or 5. Then we have newly released versions, you guys. They keep releasing new versions almost every other year. You can see here, we're already up to our FICO score 10T. And that T is for trending. I'm not going to get into all of that with you guys, but if you want to know more about it, let me know. Now, I'm showing you all of these FICO scores to let you know that even though if you do go apply for a car and you go apply for a home, both of those scores will be different. Both of them will be different. And they will not be what you see on Credit Karma. Your Equifax, Experian, and TransUnion scores, most of the time, all three of those will be different because the lenders are reporting different information or because all lenders don't report to all credit bureaus. Now, I know I'm showing you the FICO scores, and that's because that is what is used when we're getting approved for things. But when it comes to your Vantage scores, the one that Equifax, Experian, and TransUnion created, we are up to 4 models with that. We have our Vantage 1.0, our Vantage 2.0, our Vantage 3.0, and our Vantage 4.0. But those aren't going to be important, you guys. We're going to be concentrating on our FICO scores. Okay, now let's talk about these credit scores and how they are calculated. First, I want you to look here at the Vantage scores. If you can see here, they're calculated in six different categories: your payment history, your amount of credit, your credit balances, length and depth of credit, new accounts and inquiries, and total available credit. If you look at your FICO scores, they are calculated in 5 different categories. It goes from our payment history to our outstanding balances to our mix of credit to our credit history length to our recent history. They are calculating different things, okay? But I just want you to see the Vantage scores and understand why they're different. We're going to be going more into these FICO scores so that you can get a better understanding of your credit. Because once you understand how your credit is calculated, you can do what you need to do to increase your scores, and you can keep your scores there. Here we are at our FICO scores. Our FICO scores, if you see here, payment history, that's 35% of our score. Our amounts owed is 30%. But that amounts owed, that's also known as your credit utilization. That is basically the ratio that, or the percentage that you're using on your credit cards or open accounts, revolving accounts. Then we have our credit age, that's 15%. We have our new credit, which is going to be those inquiries, that's 10%. And then we have credit mix is another 10%. Now, I'm going to break these down and I'm going to go through each one of these with you so that you can get a better understanding of each one and what each category entails so that you know what you should be doing. You look here, the first thing I want you guys to understand, our credit scores go from 300 to 850. And I'm talking about our FICO scores, not our Vantage scores, because our Vantage scores used to be different. They used to go all the way up to 950, but I think they changed that and got it to be 300 to 850 along with the My FICO scores. But our credit scores go from 300 to 850. That gives us 550 points to play with. And we get that 550 points because 850 minus 300 is 550. So we only get 550 points to create our entire credit score to get to that 850. The lowest credit score we can have is a 300. Now, payment history, that's worth 35%. That is the biggest category of our credit. That is worth 192.5 points. Payment history is going to consist of your positive and negative payment history, your late payments, your positive payments, payments made on time. It also consists of charge-offs and collections. They can also negatively impact your payment history. So whenever you start getting collections and charge-offs or recent late payments, it will drop your score at least 100 points. It hurts you in your payment history category. So what does that mean? That means that we want to keep all of our accounts current. We don't want any late payments. We don't want any charge-offs. We don't want any collections. If we do have collections and charge-offs, we want to get those taken care of. If we have late payments, we want to do our best to get those taken care of as well. If our accounts are not current, guess what? We want to do our best to get those accounts caught up and back current. Okay? Now, credit utilization, that's that open credit, that revolving credit. That is your credit card balances. For an example, when I'm talking about your credit card utilization. Before I give you that example, let's go ahead. Credit utilization is worth 30% of our scores, you guys. That's 165 points. Now, with your credit utilization, you will not get any points out of that category. You will not get any of those 165 points if you do not have a credit card or if your credit card balances are over 10% of your credit limit. When I say over 10% of your credit limit with your credit cards, I'm meaning, for an example, if your credit card limit is $200, More than $20 should not report to the credit bureaus when it reports. If it does, it will drop your scores tremendously. If your credit cards are maxed out, and even though you're paying your credit card bills on time, you will not be getting any points out of that category. With our credit cards, those revolving open accounts, our balances have to stay at a minimum. Now, that does not mean you cannot spend on your credit cards. I'm not going to get into that now today. If y'all want to know more about how to spend on your credit cards and when to pay your bill to avoid the interest rate and to avoid your credit scores from going down, let me know down in the comments and I will create one of those videos so that we can go over that. But when it comes to our credit card utilization, it needs to be under 10%. Once you start going over that 10%, you start losing 20 points, 30 points. Then you have been lost 100 points before you even know it. And a credit card is necessary. If someone tells you you don't need a credit card or getting a credit card will not increase your credit scores, they either do not know or they do not have your best interest at heart. Okay? Now, credit age. When it comes to our credit age, that is 15% of our score. That is 88.5 points. You guys, if you can see the PowerPoint, that is wrong. I see it says 8.5. It is 88.5 points. 88.5 points for our credit age. That's 15%. What does that mean? That means that you shouldn't be open and closing a lot of accounts, and you need to have some accounts open building credit age. Fun fact. Consumers with a credit score of a 780 or higher have at least 10 years of credit age. And when your credit age is calculated, you guys, they are calculating your average credit age. That means they're taking all of your accounts and they're getting average of them. So think about it. If you have a lot of accounts that were only open for 1 month or 3 months, and then you have an account that was open for 10 years, when they do that average, that's going to probably knock you down. And I'm not even fixing to do the math in my head, you guys, but that's going to knock you down maybe to 1 or 2 years worth of payment history. Okay, so we want to be careful when it comes to opening and closing accounts. Anytime we open and closing a new account, our credit scores may drop, but it is okay. You will get them back, your scores back. If you're doing everything the right way, in time, you'll get them back. Now, let's talk about our inquiries. Inquiries are worth 10% of our credit score. That is 55 points. Another fun fact. Consumers with a credit score of a 780 or higher have less than 2 inquiries reporting on their credit report. That means they actually have 1 inquiry, and they also have not applied for credit in the last year. Okay? So yes, every time you apply for credit, your scores will drop a little bit. So we want to be careful and only apply for the things that we need. Now, when it does come to inquiries that report on our credit report over a year, they'll still show, but they no longer impact our credit scores. If you are shopping for a house, a car, or student loans, you can go and let multiple lenders pull your credit. Now, each one of those inquiries will show up on your credit report, but when it comes to calculating and when it comes to your score, it will only count as 1 inquiry. And you guys, that is called rate shopping. Rate shopping is when the credit bureaus say that, hey, it is okay for you to go out and try to find the best interest rate for you, so they will not penalize you for that. And you guys, in the future, that may be very important. I don't know if you've heard about what's going on in the real estate world, but being able to go to different lenders to check your rates to see what you qualify for is important. And you should get that in your mind that it is okay for you to do so. Now, let's talk about the credit mix, you guys. Credit mix. Credit mix means that you have different types of accounts and that you can show lenders that you are responsible because you can handle different types of accounts. Now, that means that you do have to have a credit card. I know, and I'm coming back to these credit cards because I hear it all the time. A lot of people say, well, such and such told me I don't need a credit card, or I don't want a credit card. You have to have a credit card. I mean, it's a necessity, you guys. Okay? We have to have a credit card. Now with our credit mix, we need credit cards. We need loan accounts. We need different type of credit card accounts. We need our Visa and our bank card, credit cards. We need store cards. When we're talking about store cards, we're talking about our JCPenney, our dealers, our Target, our Walmart. Then we also need gas credit cards. You guys, our Shell, our Raceway, our Chevron, wherever you prefer to get your gas. We also need gas credit cards. Now, when it comes to loans, yes, we need short-term loans and long-term loans. We need all of that in credit mix, you guys. Okay? Now, I hope that you guys were able to follow me and understand that credit score breakdown and how your points are calculated. And before I move on, though, you guys, I want you to see and I want you to understand that your payment history and the way you handle your credit cards is worth 65% of your score. That's over half of the battle right there. Okay? Having a credit card, having minimal recent derogatories is half of the battle. And then we can work on inquiries. And then we can work on, then we can work on credit age. And then we can work on not applying for so much stuff. And then we can work on our credit mix to make sure that we have the right types of accounts available. Now, let's look at this example. Because I really want you guys to understand this. Say if you do not have a credit card, okay, and everything else on your credit report is perfect. And when I say perfect, I mean perfect, lined up just right. Remember, we only get that 850 points. And remember, having a credit card is worth 165 points. So 850 minus 165 leaves us with a 685. Do you understand what that means? I don't think you do. That means that if we do not have a credit card, or if our credit card balances that have reported to the credit bureau is more than 10%, we cannot get a 700 credit score. Okay? It is impossible mathematically. And I want to go back and correct myself as well. When it comes to that, your credit utilization is 30%, you guys. That's what everybody says. You should try to keep your credit utilization under 30%. But I have been saying 10%, and I'm going to keep on saying 10% because another fun fact, and you guys, I got these fun facts from myfico.com. You can get them there as well. But fun fact, people with a 780 credit score or higher, their credit card utilization is between 6 and 7%. Okay? 6 and 7%. So understand, we got to have a credit card and we have to keep our reported balances low. Now, are your credit scores under 700? Do you understand why your credit scores are under 700? 9 times out of 10, it is because you have recent derogatories, you have collections, charge-offs, and late payments. You don't have a credit card, or your credit card is maxed out, or you don't have enough credit age. If your scores are under 700, one of those 3 are probably your pain points, if not all of them, or maybe 2 of them. But those are the things that are hindering you. What does that mean? That means if you want to get to a 700 credit score, you need to work on building your credit age. No opening and closing accounts. If you don't have a credit card, you want to get a credit card. If your credit card utilization is over that 10%, you want to work on paying your credit card balances down to under 10%. And I'm not saying make your credit card balances 0. I'm saying pay them down under 10%. Okay? And we also want to make sure we keep all of our accounts current. If our open accounts are currently derogatory, we want to get them back in order. We want to get them out of default. We don't want any new collections. We don't want any new charge-offs. We don't want any new late payments. We want to be building positive payment history. If you can do those 3 things, you can get your credit score over a 700, you guys. Now, I want to show you some things, or I want to tell you some things that you should avoid doing if you do decide to work on your credit. Because I'm fixing to tell you the 3 things that most people skip, whether you're doing it yourself or whether you're working with a professional company. These are the 3 things that they skip. Number 1, they skip cleaning your personal information. When it comes to your personal information, you should only have one version of your name showing. You should only have one address showing, and that is your most recent address. Your date of birth and your social security number should be accurate. You don't need any employers reporting on your credit report, and you really don't need any phone numbers. You need to get rid of all of those. That is the first thing that needs to be done. Your personal information needs to be clean. Now, the second thing that most people miss is blocking those Secondary consumer reporting agencies. Those are the people who are verifying, or those are the companies that are verifying the information from the credit bureaus when you are disputing or challenging information. So it's going to be important to freeze those. Now, a lot of people may tell you that it doesn't work to freeze it or something like that. It doesn't matter. Do it anyway. Okay? Now, the final thing that most people mess up when they are disputing is they're disputing incorrectly. They may not ask for the correct thing, or they inaccurately or incompletely request information. They request the wrong thing, or they don't give the credit bureaus complete directions. Because when you're disputing with the credit bureaus, you should be letting them know what you're disputing, why you are disputing it, and what you want them to do about it. You have to let them know those three things. Everybody does not do that. They may skip some of those steps. Now, you guys, I really, really, really hope this has been informational to you. I really hope that you understand your credit score better now. And I really hope that you know the steps that you should be taking once you hang up or once you get off this video to go and start increasing your scores now. If you don't know, first things first, if you have a credit card, start paying those balances down. If you don't have a credit card, get you a secure credit card with your bank, or see if your mom or dad or your sister or your brother or your husband will add you as an authorized user to one of their credit cards. Then if you have any accounts that are currently in default, you want to get those accounts caught back up. If they're currently late, we want to get those caught back up. And then we want to work on getting our collections and our charge-offs removed. And if you guys need more information on how to get those charge-offs and collections removed, make sure you let me know. Drop it down under the video, you guys, and I will be happy to get that created for you. Now, you guys, if you need professional help or DIY help, or one-on-one consultations, we have those available for you. You can get the link up under this video. You guys, I thank you for staying with me all the way to the end, and I hope it was worth your time. Again, let me know down in the comments. Until next time.